Hello, welcome to this ex-Africa webcast. My name is Robert Besseling. I am the Executive Director at EXX Africa. ex-Africa is a specialist intelligence company focusing on providing political, economic and security risk forecasting across the African continent. Today, I want to talk about the COVID-19 pandemic and provide an impact assessment on the African continent in terms of political, economic and security risk implications. Now, since the COVID-19 situation arose on Africa, the virus has spread very quickly. And there are now well over 1,000 cases confirmed by the World Health Organization across the continent. The main hubs where the virus seems to be most active at the moment are firstly in North Africa, particularly Egypt, Tunisia, Algeria and Morocco, as well as South Africa, where on 23 March, the cases jumped from 274 to well over 400 cases and have since gone to almost 550 cases. Similarly, a new hub seems to be emerging in West Africa in the big urban centers around the Gulf of Guinea cities there. And certainly we are watching an exceptional increase in confirmed cases around the Gulf of Guinea. Now, it has to be borne in mind that there is a potential for discrepancies, underreporting, and even manipulation of case numbers in certain instances. For example, there have been reports of underreporting of cases in countries like Egypt. Certainly also there's a potential that because of a lack of laboratory facilities and a lack of awareness of the virus in multiple locations across Africa, the number of cases will actually increase much faster now that a pandemic has been declared on the African continent. There are still a number of countries which have not declared any confirmed cases. And it's certainly a possibility that very isolated countries in Africa do not yet have any confirmed cases of the COVID-19 virus. However, most African countries are likely over the next few days to report cases, and we are likely to see the numbers exponentially increase over the next few weeks across the African continent. My job today is really to look more at the short to medium impact or supply chain disruption, as well as the longer term impact on the African continent. Now, over the past 10 days, African governments have started closing their borders with an unprecedented number of travel restrictions and border closures being imposed across the African continent. This was really led by South Africa and the North African countries and has really since then spread across the continent, and most African countries now have closed their borders or imposed some sort of travel restriction. This is really aimed at trying to protect the largest African cities. Just bear in mind that a city like Cairo or a city like Lagos in Nigeria has well over 20 million people just in those urban centers. Similarly, the major urban centers in South Africa, Johannesburg, Durban, Cape Town, as well as the major East African cities of Nairobi, Mogadishu, Addis Ababa, need to be protected. And that's what the border closures and travel restrictions are aimed at. Over the past 24 hours, we have also seen a number of countries imposing lockdowns. In other words, where civilian populations are restricted to their own homes based on a number of varying conditions. Africa is imposing these lockdowns and border closures and travel restrictions way faster than many European and North African countries have done. And similarly, the deployment of the military in countries like Tunisia, Egypt, Sudan and South Africa is also well ahead of the curve, as we have seen elsewhere in the world. What this means for global supply chains is, first of all, that a number of airports are now being shut down completely. Some of Africa's largest airports in southern, west, north, central, and east Africa are being closed down. Some airports may remain open to allow for cargo transportation, as well as for repatriation of nationals, but many of them are gradually being shut down. Similarly, there is the prospect of seaports being closed down over the next few weeks as the pandemic outbreak spreads. And a number of ports, particularly in East Africa, which interconnect to China and other Asian markets, have already seen serious supply chain disruption and a lower workforce present at these ports. Therefore, for Africa, it will be crucial over the next few weeks to ensure a steady supply of fuel, food, and manufactured items to keep supply chains and food security assured. Let's now look at the one-year impact assessment model that ex-Africa has created over the past few days and has been testing with a number of different scenarios. Ex-Africa has developed a COVID-19 impact assessment model. This is being developed for the assessment of African countries on the basis of political, security, and economic risk in the one-year outlook for all 54 African countries on the basis of a number of variable and weighted risk indicators. Now, these indicators include obviously our own default high risk score per country, which looks at the political, economic, and security situation, which ex-Africa already focuses on for our clients. It also looks at the proportion of COVID-19 cases within the population. And as we see a larger proportion of transmissions and infections across a number of African countries and population centers, this will certainly also become a much more important weighted variable indicator. The model also includes African countries' health indicators, life expectancy, and the ability of countries to deal with transmitted diseases. We also look at population density and the prevalence of megacities, like, for example, those big population hubs in West Africa, Southern and North Africa. And crucially important, particularly in the one-year risk outlook, is the anticipation of economic shock, both from lockdowns of local economies, as well as the anticipated global recession and the ongoing oil price war between Russia and Saudi Arabia, which has also impacted the economies in Africa to a certain extent. Here we're looking at revised forecasts for economic growth, for export revenues, currency exchange, foreign exchange reserves, debt servicing, and inflation, as well as other indicators. We believe that the provision of this type of intelligence is crucial at a time of global emergency. So we have made the results of our model publicly available on our website at exafrica.com/insight/COVID-19. The results of our COVID-19 impact assessment model in the one-year risk outlook show at least 5 countries being within the critical impact zone. That means that these countries are by far likely to suffer a more serious to critical impact of the COVID-19 pandemic and subsequent global recession. These countries are Lesotho, Swaziland, Equatorial Guinea, Burundi, and primary Nigeria. Now, we have played with a number of different scenarios on the impact model, and Nigeria has come out as the most exposed, the most vulnerable in almost every scenario we have looked at. That is mostly because Nigeria already has a high political risk score on our own risk scoring methodology, and because the country has weak healthcare indicators according to the World Health Organization and other sources, as well as the fast rising number of COVID-19 cases, both within Nigeria and the broader West African region, and also because Nigeria has an over-dependence on oil revenues. In fact, 90% of GDP is determined by oil revenues. This, of course, leaves Nigeria the most exposed African country. However, I do need to say that over the next few weeks and months, the results of our model are likely to continue to fluctuate and change because the variables will continue to change as well. For example, COVID-19 cases will go up in a number of jurisdictions faster than in others. That will impact the model. Similarly, we are due to review our own political risk scores and current default high-risk ratings across the African continent. That means that countries like oil producers and oil exporters like Nigeria, Gabon, Equatorial Guinea, Angola and others will certainly see a substantial increase in their political risk rating, according to our own risk scoring system. Other countries, even those with more diversified economic bases that rely on tourism or trade, similarly will be impacted. So we are due to review our risk scoring methodology over the next few weeks and then release new risk score ratings per country, which will feed into our impact assessment model. Another key factor that we are building into the model is the potential of suspended African elections this year. For example, Togo and Comoros did hold elections in 2020, and that was before the pandemic was declared. Guinea, in West Africa, went ahead with its elections even after the pandemic was declared. This had triggered violence in the country and has certainly uprooted the political system and pulled the credibility, the legitimacy of those elections into doubt. We are now looking at the potential of delayed elections in Malawi, a rerun of the 2019 presidential elections, with sufficient controversy for us to be worried about those elections. Similarly, we are assuming that elections in Ethiopia, Burundi, Seychelles, and potentially Tanzania will also be pushed back to later in the year. For now, at least, we're unlikely to see a suspension or delay to the West African elections due in Niger, Ghana, Burkina Faso and Côte d'Ivoire, because they are still scheduled towards the end of 2020. However, any perception of manipulation of the current pandemic crisis by governments for their own political benefit will trigger fresh civil unrest and political protests, even in a state of lockdown. I am particularly pinpointing the major urban centers in the Maghreb and North Africa, where we could see a return of the civil unrest that we saw in the spring of 2011 and the spring of 2019, a recurrence of this in the spring of 2020, as many of the populations currently under lockdown will not abide by a serious deterioration of their political liberties once again. So certainly a contagion of political unrest from the Maghreb region into sub-Saharan Africa is something that we at Ex-Africa are looking at. Another key indicator that we need to bear in mind is the potential that security risks, particularly Islamist insurgency, in West Africa, or in North Africa, the Sahel region, as well as in the Horn of Africa, spill over and intensify at this time, mostly because security forces and governments are preoccupied with containing the pandemic. Similarly, French, US, and other multilateral forces deployed in Africa will see their attention focus or distracted by the COVID-19 pandemic. Therefore, there's an opportunity that will be perceived by Islamist insurgents to spread their insurgency and to attack commercial assets in these hotspots for militancy, terrorism and insurgency in the Sahel and in the Horn of Africa. In terms of the economic risk impact and potential mitigating factors, I would like to first of all say that the African economies that grew at record pace over the past few years, particularly in 2019, and were forecast to do well in 2020, have arguably a stronger buffer in place to deal with the economic shock that is about to hit Africa. Countries like Rwanda, Ivory Coast, Ghana and Ethiopia are certainly at a stronger position than many other African countries which are already stuck in annual recession, like Sudan, Equatorial Guinea, Zimbabwe and others. Countries like South Africa and Swaziland, which are also struggling with low growth rates and are stuck in quarterly recessions, certainly also will now face a much harsher reality when it comes to the economic impact that this crisis will have on their economies. Furthermore, in terms of foreign direct investment, we are likely to see capital flight from the continent in a number of key places where we've seen the largest foreign direct investment over the past few years. Countries like Egypt and South Africa and Morocco, which have some of the highest confirmed cases of COVID-19 on the continent, are likely to be most impacted by this. Similarly, African countries that are developing large oil and gas projects like Mozambique or in West and East Africa are likely to see a divestment of these projects' investments. The prospect of gas from West Africa, oil from Kenya and Uganda, or LNG from Tanzania and Mozambique will be pushed back. And already we're seeing companies like ExxonMobil strongly considering pushing back final investment decision in countries like Mozambique over the course of 2020. Another key point to make is that a number of African countries have very little potential to raise their own domestic revenues and will struggle to service their own debts. The yields on bonds of Zambia and Angola have tripled over the past few weeks. This makes their debt situation critical at this stage. African finance ministers are now talking to the United Nations and the World Bank and others to try and arrange anything between $44 to $100 billion in suspension of interest payments on these countries, both concessional and commercial loans. This could be a further shock to the international financial system, but if supported by the IMF and the World Bank, could provide some serious relief to many of the African sovereigns, which would otherwise almost certainly default under current scenarios. I've mentioned the World Bank a few times, and the World Bank, together with the IMF and Africa's own central banks, are the first layer of defense in terms of economic shock. The World Bank has increased its COVID-19 response to $14 billion, in part to help sustain African economies, with an immediate disbursement to countries like Ethiopia expected over the next few days. The IMF is also due to donate $50 billion to help combat the COVID-19 outbreak worldwide, including for African countries. The World Bank has committed funds to Kenya, to Cameroon, to Liberia, and various others. But beyond multilaterals, African countries themselves will have to find a way to deal with this crisis and the economic impact. For example, Tunisia has allocated $850 million to try and combat the economic and social effects of the coronavirus health crisis. Algeria is cutting the public payroll. Meanwhile, South Africa is unlikely now that the public payroll will be cut according to the finance minister's previous budget. Instead, the South African Reserve Bank has made a 100 basis point cut to its main lending rate, quite similar to what is expected in Nigeria, now that the central bank there has devalued its official currency rate by 15%, with the potential for interest rate cuts in the country too. Beyond multilateral and central bank initiatives, it really is down to global businesses and philanthropists, like Chinese businessman Jack Ma's donations of coronavirus test kits, which are already arriving on the continent as we're recording this webcast. Africa will need a multilateral, multi-pronged strategy to try and mitigate the impact of the coronavirus. A couple of key thoughts that I want to leave you with today. First of all, the United Nations Economic Commission for Africa has taken a real 4 initial steps is at the forefront of trying to estimate the shock to GDP growth. The UNECA predicts that GDP growth across the continent could drop from an expected 3.2% to just about 2% in 2020. Many commercial banks still think this is far too optimistic. And that's because total African export revenues could lose about $101 billion over the course of 2020. South African exports alone are set to contract by 10% in 2020. The United Nations ECA also estimates that African oil exporters could lose $65 billion in revenue this year, with almost $20 billion alone in Nigeria hit from falling oil revenues. Beyond all of these drops in revenues, we have to assess the impact of lockdowns and border closures on the ambitious initiative to create an African free trade region. The AFCFTA was meant to create the world's largest free trade area of 1.2 billion people in 54 African countries, with a combined GDP of $3 trillion. It is now very unlikely this will go ahead in its current form, as most African countries have closed borders, and many African countries will have to defend their own economies before thinking about free trade. And potentially, if the Chinese economy were to recover later this year, ahead of, say, European or North American economies, would there be a potential of China stepping in again to fill the void and offer more support to African struggling economies? As lending capacity to the World Bank and other multilaterals comes under greater stress, but there's a potential for China to see an opportunity to step in before others to try and save some African countries from the impact of the COVID-19 crisis. Based on those thoughts I'd like to leave you with, I would like to thank you very much for listening to this webcast. We are expecting to produce more of these webcasts over the course of the pandemic. In the meantime, if you do have any questions, you are very welcome to email us at insight@exxafrica.com. I look forward to hearing your feedback and any questions, and we will remain available to keep forecasting Africa's risk outlook. Thank you very much for your attention, and stay safe wherever you are.